Hello. Hello. Welcome, everybody, to another Market Open. Here we are. It is May 8th, 2023. It is 9:22 a.m. And we've got a big day today. We've got Palantir's earnings. This is going to be an exciting day. A lot of stuff to discuss, a lot of stuff to get into. It's going to happen after the bell. And there's going to be a lot to discuss. It's going to be a lot to get into. There's a lot to get into. There's a lot to discuss. I'm excited for it. We'll preview a little bit earlier today. I mean, I've done my earnings preview video. Last podcast we had on Friday was pretty much dedicated to all the things that we had to discuss for these earnings. And now we have to see what's going to happen. It's going to be exciting, though. We don't know. Bay Ray, good morning. Seth Roth, Jason M. Russo, Midwest, Zion, Ray, DRK, Philip, Felicia. Thank you all for being here today. It's time to finally see what Palantir can do in 2023. Hey, Amit, are you buying Palantir before or after earnings? Probably after. I'm kind of not interested in doing an earnings play. Hi, Amit. Happy Monday. Hello. Martin, what's up? So, I'm not going to be really buying before earnings because I have no idea what's going to happen. I have zero idea what's going to happen for earnings. And because I have no idea, I'm just like, you know what? We'll just wait till after. I have enough shares. I feel happy with the shares I have. So we'll wait until after earnings and we'll see what's going on. Are you streaming earnings? Yes, 4:30 live on this channel. The thing is already set up, the live stream. Put a reminder, whatever you have to do, make sure you are there. Wake up, bro. You seem tired. Yes, I am tired. Oh, my God. I am so tired. But nonetheless, we are up. We are awake, and we got to get to work because that's all we got to do. Owen says it's tanking after earnings. It might. Or it might be up. We have no idea. Good morning, Amit. How do you talk to a fish? You drop it a line. I love that Smoked Tuna is the account that made that joke. I love it. Myra, what's up? John Stevens, Paul. Does Palantir usually report in the morning? Yes. Last quarter was the first quarter they stopped reporting in the morning, and they're going to be reporting after hours. So that'll be happening this one as well. CEOs don't get tired. Exactly. CEO tired. Your work ethic is insane. Very inspiring. Yeah, I mean, there are very few opportunities in life where you have the ability to, produce and actually execute. And so, we're in the midst of that opportunity right now in my life, and that's why I just got to keep going. Palantir is up 3.89% pre-market, so obviously the street might be a little excited for earnings. Apple 172 down a little bit. All estimates are pointing to a negative EPS, so not GAAP profitability. If they can show another cent or two of GAAP profitability, I think that's what sends the stock up pretty well. As soon as earnings release. Does it get sold off? Maybe. I mean, maybe. Does it not get if it runs up to $9, can it sustain itself? I have no clue. Right, that's going to be the hard part here. SoFi at 521 pre-market. A lot of the banks. Look at this. Western Alliance is up 14%. PacWest up 31%. It was up 80% last Friday. These banks are up on this idea that the United States is going to save the banks. And that's why they are doing well. Meta at 230 right now. Now, this happened with FRC where it was up some days because, there were some things going on about banks being saved. Doesn't mean the banks are actually going to be saved. In fact, it means that it just might be a buy and sell on the news before things can get worse. So I have, the banking system in the United States is definitely not saved, at least in the stocks, just because there's some rumors out there. We're going to have to see where it goes from there. Mitt, I want to get rich off the Truist play. So if you watched our podcast, is Truist. I can go through the DD, but we did a lot last night. The point is, this is a regional bank that probably doesn't deserve to be down where it's down. It's down at COVID levels, and it's the 7th largest bank in the United States of America. I would look into this one. TFC is a stock you want to look into. It pays an 8% dividend, so a fat dividend, and it's been sold off with the rest of the regional banks really for no reason. I mean, if you just look at their 10Q, and I actually went through their 10Q on Saturday night, me and Chris, like we went through the whole thing and we were just like, this doesn't make any sense. So TFC is a company you might want to look into. It is, I mean, the PE is 6.5. Traditionally, banks trade at a PE of around 12 to 14. And it's been stuck in a range from about 45 to 58 for like the past 5 years. The one time it got below that was COVID. And then right after COVID, it spiked back up. And then the one time it got back to this level, this 25, 28 level, the banking collapse or the banking crisis of 2023. So the only time it's gone down to these levels is when there's been some national collapse that caused a massive sell-off. The only problem is it's not justified to have a sell-off. So IEP, or not IEP, this is another one that's up 2%. TFC is something you want to look into. Definitely something you want to look into if you are looking for a banking play. And again, Chris's Twitter has a lot of your mic is dropping from time to time. Okay, let me know if the mic still sucks. It should be. Oh, hold on. Okay, I know why. Give me 1 second. Let me fix it. 1 second. Okay, this is gonna work. Yeah, this should be better now. Yep. Okay, it shouldn't cut off anymore. This should be good. Why Bitcoin is crashing? Yeah, apparently the Bitcoin network is like in a bad situation today. There was too many like transactions or something. I don't know exactly, but it got down 5% from last night, and I was like, "Ooh, that's a lot." That's a lot. A real brick fell on the wire. A real brick fell on the wire. TJ, what's up? Palantir is a Ponzi scheme. Look, man, you might be right. Palantir might be a Ponzi scheme. That's what's going on here. It's going to be exciting, guys. I don't know. I think earnings will be okay, but look, I mean, it's Q1. You can't expect too much, but I want to see Karp talk again specifically. He actually just gave an interview that I'm going to react to in a little bit. And he seemed pretty excited in that interview. So I hope that translates into some decent earnings for the company. And we'll see where it goes from there. All right, ladies and gentlemen, it is May 8th, 2023 at 9:30 a.m. The market of stocks in the America of the United States is open. Wake your ass up. If your ass is not up, Bitcoin 27,000, IEP up 2.74%, Icon Enterprises FUBO up 11%, 1.6, Super Microconductors or SMCI 135.78, Tesla. Last week it was 162, now it's 172, so it's up $10, 1.57%. Apple 172, Palantir 764 up 3.4%. Lyft, this guy's getting bought out or demolished or going bankrupt. Something's happening to Lyft, but I don't know if Lyft is surviving. Square at 59.50, DraftKings 24.4, NASDAQ 12,229, Paramount Global. I hate Paramount because on our Finance Junkies, we showed 20 seconds of Billions, the show, and they demonetized the video. Like this is why they needed our ad revenue so much because their stock collapsed that they're taking our 5 cents of ad revenue. So Paramount, yeah, have fun with your flailing stock price. Now, the interesting thing is Warren Buffett owns a lot of it. I think Warren Buffett might load up some more because it's an acquisition target, or he might sell the crap out of it and just put it into Occidental. But I mean, Buffett's got a decent amount of it, so something's got to happen. SoFi at 521. Again, the banks are up. We got Truist up 4% at 29.86, and we got Western, Pacwell, all these other ones up as well. Yeah, it's interesting. See, a lot of these are just they're up on the news again that on Friday, that on this rumor that happened on Friday that you can't short banks. Now, it's not a real thing yet, but the idea is that it might happen, and that's what's causing these to be up. Enphase at 160, Microsoft 309. Wow, Microsoft's at 309. Goodness gracious, Microsoft's just going up. Google 106, Amazon 105, Bank of America, JP Morgan, Wells Fargo. So the big banks are not up that much, but the regional banks are up a lot more than expected. Pinterest, Etsy, Uber, Robinhood. Robinhood earnings are Wednesday. Look at all this green. There's a lot of green in the market, and Robinhood earnings are on Wednesday. I'm very interested to see how Robinhood's doing. Don't think they're going to be that good, but it is going to be interesting to see what they have. Buffett does not buy based on takeovers ever. He said so over the weekend. That's true, but I mean, if he's underwater on Paramount and the dividend is gone, either he sells it off or maybe he thinks that there is consolidation happening in the streaming business, which he also said this weekend. And maybe he does buy. I don't know. We will see. Buffett did a lot of good questions and had a lot of good talks this weekend, and CNBC obviously reported and covered all of his stuff. I mean, he was talking about Apple a lot, and they were just saying, like, why is Apple still 35% of Berkshire? And his argument was just that Apple is the best consumer brand in the world and that people would not trade their iPhone for a second car. And I think he's right about that. So it seems like, they're not selling Apple, and if anything, they're looking to double down on Apple even more. The majority of the shares they bought, about $35 billion worth, was from 2016 to 2019. And now those shares are worth about $119 billion. So they've about 4x'd that money in the tunes of billions. And shareholders are very happy about that. Their other top positions are Bank of America, Coca-Cola, Occidental, Chevron, and there's one more that I'm forgetting. That's like in the top 5. But those are the ones that, have produced. I also tweeted something interesting over the weekend. I want you guys to see this in the context of ARK versus Berkshire. If you're not following Twitter, link is in the description. You should follow Twitter today because there's a lot of coverage coming on Palantir. So even if you don't have a Twitter account, I would make a Twitter account and just follow to keep up with all the coverage because there's going to be a lot of coverage today. Okay, so take a look at this. Berkshire Hathaway is up 64% over 5 years. Right, which is a pretty decent gain over 5 years, 64%. Like that's not bad at all. And ARK is down 5% over 5 years. And imagine if they didn't invest in Tesla, where this ETF would be, right? Like where would it even? It's just incredible. Berkshire didn't invest in Tesla. Imagine if they did invest in Tesla, and they're up 64%. And ARK didn't invest in anything Berkshire invested in. They invested in everything else. But they got Tesla right, which is why they're only down 5%. So it's really interesting when you think about this. I don't think Billions was a Paramount show. Well, then why did Paramount claim my video and take my $2 of ad revenue? That was annoying. That was very annoying. Mate, you need to buy Manu. We'll get it. I'll look into it. I'll put that on my list. Manu. Haven't seen that one. I can't invest in Netflix, etc., knowing that every show is immediately uploaded online. That's how I watch all my shows and movies. Yeah, that's true, bro. Every show, bro. There is so many websites where like every show, every movie is uploaded online. They just don't need Netflix. But it's about convenience, right? It's about like, do you want to like click? When you go on these illegal websites, you have to like click it and then it pops up an ad. And then you got rid of it, and then you click it, pops up an ad, click it, pops up, click it, and then you got to go through like 7 clicks, and then finally you click play, and then it just doesn't show the ad. It's crazy how companies like are really paying for that level of advertising. Like there are companies in the world, primarily like adult websites, to be honest, that are like, put my ad before the play button and make sure they have to click it 7 times to get this ridiculous pop-up before you allow them to click the play button. And that's how the ad works. Like, could you imagine if that was YouTube? Like, before I click the video, I have to click this button and a stupid ad, and like it would be insane. It would be ridiculous. Well, that's how it works. All right, let's take a look at our boy Siegel and what's going on in the streaming world. Not streaming world, sorry, in the interest rates world, and why he thinks the bar is extremely high for another rate hike. Let's pull it up here. Here we go.
Report showing a stronger than expected increase in non-farm payrolls for the month of April. The unemployment rate dipping to 3.4%. The strength of the report causing some speculation that the Fed could keep raising rates for longer. But our next guest says the Fed is done raising and the bar is high for it to continue. Let's bring in Jeremy Siegel, Professor Emeritus at Finance University of Finance at University of Pennsylvania's Wharton School of Business. Good to see you again. Professor. There were some revisions from previous months, so it was stronger than expected, but definitely we've seen the average come down to where it's not running nearly as hot as it had been. So maybe that's why we saw the markets react that way. The Fed wants to, at least the body language, they want a position that they still might raise. And I understand that. You probably understand it too, but you don't think they will.
Right. I think the bar is extremely high. I mean, let me tell you what I think has to happen. On Wednesday, we get a CPI. It has to be much hotter than expected. And I don't mean just 1/10. I mean, 2-3 tenths hotter. We need a very hot employment report for the month of May. And then on the first day of that June meeting, we get another CPI, and that has to be much hotter. If those three things happen, which I think are way out of certainly extremely low probability, I mean, not impossible, then I think another quarter point might be on the table. But look at all the uncertainties with the debt ceiling. I mean, you guys have been talking about it. It is amazing that, the treasury bills, which are considered the safest in the world, that 1 month treasury bills are 5.5% or more above the Fed funds rate, which is between 5 and 5.25. That is a very rare situation. Is that going to be resolved by June? And even if they kick it down the road, probably with an extension, that won't be resolved for a period of time. I think the body language, and I think you're right. I mean, Powell was saying that I'm going to let the forces of the cumulative rise in rates, which is 500 basis points, the tightening that we know is coming because of what's going on in central banks. There's not going to be a banking crisis. I'm not worried about that and a deposit flight and all that. I'm worried about tightening of lending standards. That's something that is certainly going to take hold. And I think he's content to let that play itself out and see if that does enough to keep slowing the rate of inflation. By the way, one other thing I thought was very interesting. He said, and he said it twice, that he didn't think that wage increases were the principal cause of inflation. Remember, that's something that he had focused on before. I thought that was an interesting statement.
That actually is a really good point, that wages were not the principal cause for inflation, which signals that the job market and the decline of jobs, or the lack of jobs coming in, might not the Fed wants to see a lot more job loss. But if he doesn't think wage increases are the principal cause for inflation, even if we don't get that massive decrease in jobs that he wants to see for unemployment to go from 3.5 to 4.3, that might not stop him, which is Siegel's point, from wanting to raise rates, right? Which is a good thing for us.
Now, that's something that I believe in. I think that it's wrong to suppress wages, which have fallen behind inflation going forward. But he did make that remark twice in the press conference that followed. So that body language, that statement, the bar is extremely high. So I think,
Look, if I had to say today, May 8th, I don't think we're getting another rate hike, especially because I think CPI is going to be nice going into, I think we get CPI next month, or no, in next week, right? Or this week? Is there CPI this week? Hold on. Next CPI. When do we get CPI? CPI. Oh, May 10th. Oh, shit. We have earnings for Palantir today, and we have CPI on Wednesday. Yeah, I think if we have CPI come in below 5, I don't think there's another rate hike, because that's getting closer to 2%, which is what the Fed wants, right? Okay, so Palantir earnings. We got it today. Let's go through a little bit of what we got last quarter, okay? Is this sharing? Oh, no, this is not sharing. Sorry. I want to show you guys what we did last quarter. And why is this not sharing? You guys don't see it, right? Hold on. Maybe I have to. Is this because it's a PDF? Palantir share. Okay, let me share another website. Will it share? Oh, that's so weird. It's sharing the Google, but it's not sharing a PDF. What the heck? That's so stupid. Why won't it share a PDF? All right, let me try it one more time. Share. Because I wanted to show you guys some numbers on that one, and then go from there. Yeah, it's not sharing. Okay, regardless, I'm just gonna read these numbers and you guys will see some of the stuff. Okay, so their U.S. business grew 32% year over year to 1.2 billion in full year 2022. Commercial revenue grew 67%. Revenue grew 24% year over year. Customer count increased 55%. Adjusted operating margin of 22%. 976 deals closed. These are the main things we're looking for, right? We are looking for how much can we increase commercial revenue, how much can we increase number of customers, and how much can we increase the overall qualitative feedback that customers are giving to the company in regards to how well the business is growing. So we had 201 million full year 2021, 335 million full year 2022, 67% year over year growth. That means you're going to want to see close to about 450 to 500 million for the full year of 2023 in just US commercial. And if that has to happen, that means we need to see significant U.S. commercial revenue growth if we want to keep that 67%. I think that one they're going to do really well on, especially how Alex Karp has been talking. U.S. government revenue growth was only 22% last year. I don't know if that's going to be the same, right? I don't know if that's going to be the same. And so we're going to have to see kind of how that plays out. Now, commercial customer count. Last year, we ended with 260 commercial customers. We got to beat on that one. We got to have more commercial customers. We had 260. 2021, we had 147. 2022, we ended at 260. Can we get this to about 350 by the end of the year? Because if we can, I mean, that'd be 100 new customers. That would be really good. And that it gets easier to scale. Like the network effects of scaling the customer count just grows and grows and grows as we get more. Because in general, more people tell more people about, the product and the service and what's going on. And they just have to be able to do that. Now, the other big slide here is that during Q4 2022, Palantir closed 55 deals of at least 1 million, 11 of which were 5 million, 5 of which were 10 million. This is also what I want to see. I want to see smaller deals in the $5 to $10 million range, and I want to see multiple of them closed, because even if that doesn't massively increase revenue, it does show the diversity of applicability that this company's software can have in a variety of different use cases and with a variety of different companies, right? They still have 2.6 billion in cash. I'm going to be very curious to see how much money they put into short-term treasuries. Again, another reason they can get GAAP profitable is because if they put 1.5 billion in short-term treasuries, their gold is up. They do some tricky things with the SPAC revenue. Either they get some or they maybe cut some different things. SPACs might actually lead us to a little bit more of a loss, which is what happened in Q3 2022. The SPAC revenue, Faraday Future, went bankrupt, and so we had to write that off. There's going to need to be some financial engineering along with, the growth that they have to be able to figure out how do you get to that GAAP profitable quarter, which I think they'll do. I think they're going to figure that out, even if the numbers aren't amazing. And so we want to be able to see that as well. Now, their adjusted operating margin went down from 31% in 2021 to 22% in 2022. My bull case is that this gets back up to eventually 30%. And I don't know if it's this quarter, but if they can show 22% adjusted operating margin up to like 25, even 24, we're in a healthier growth of the adjusted operating margin. The reason this is down is because of sales, SBC, right? R&D, marketing, like healthy things that are keeping the margin down. And you don't need a huge adjusted operating income margin when you're still at a growth phase, right? Because you're not trying to be massively profitable. They're trying to show some profit, but they're not trying to show a huge profit. So if we can get that there, then that would also be really, really good as well. I don't like the financial engineering. I don't like it either, but you got to do what they got to do. You got to do what you got to do. At this point, like if they want to be GAAP profitable, they got to get there. Interest on their cash will help. I agree. I mean, look, the reason I think they're not buying back their shares as well is because they know they're not going to get a 4 or 5% 3-month return on their shares versus putting it into treasuries and just getting 3% right there. And then boom, you've got some money, right? It's like, instead of buying Bitcoin, we're going to buy this guaranteed 3 to 4% on top of this 1.5 billion we have in cash. Take that money, put it into the business and keep getting shit done, right? And so I think that's also a pretty smart thing for them to do. Now, remember, for first quarter 2023, they expected $503 to $507 million of revenue, and adjusted income of operations between 91 and 95 million. I think there's a good shot they could beat the 503, 507. Maybe they come up with 508, 509, maybe 506, right? Then that's a beat on the low side. That's not what's going to get the algorithms to shoot the stock up. What's going to get the algorithms to shoot the stock up is the expectation of negative EPS turning into positive EPS. Let me actually pull up Twitter, because even though this screen isn't sharing, I can definitely show someone else who went to the Bloomberg terminal Oh, now I know why he's an intern at Bloomberg. Oh, that's in his bio. I didn't even know he was interning at Bloomberg. Yeah, so this is what the street expects for Palantir today. And again, we will be live streaming it today, okay? It'll be live streamed today on my channel, 4:30. Put it as a reminder. Tell Siri to remind you. Whatever you do, do not forget. It's going to be a big, big day. So make sure to remind yourself. The thumbnail is already up on the channel. It looks pretty cool. So check it out. EPS adjusted 0.38 cents. EPS gap negative 0.011 cents. So if we can beat this, if we can not come in negative, I think this is what shoots the algos up in our favor. Revenue 506. So that's a beat of about 2 million on the low side. Net income 85 million. Operating profit 94 million. EBITDA 99.3 million. This is what Bloomberg expects for Palantir. This one number, we beat this one number, the stock's going to shoot up. Now, will it get sold off? Probably. But if we want to see the stock shoot up a little bit, this is the number we have to beat. There's going to come a quarter where revenue, they expect 506, and they're going to put up like 600 million. And it's just going to be insane. But that growth is not here yet. And when that growth is here, that's when it's going to be really, really, really fun. So we're going to see. Okay, a couple questions. What is the best argument for why Palantir will not be hurt by ChatGPT? ChatGPT is a consumer product. Palantir is not a consumer product. ChatGPT for the enterprise is not a proven product that can protect data at scale with LLMs that are trained on things that matter. A lot of the data ChatGPT has is just stolen from the internet, right? That doesn't give any credit to the like I literally went on a website, I typed in something, I read their article, I went on ChatGPT, typed in the same thing. The exact same thing from that article was on ChatGPT. And I'm like, there's no credit to this article, which is just like, you're stealing, right? Now, it made my life easier because I don't have to look through these articles. But nonetheless, there's a lot of legal and ethical implications there, especially when you talk about in the context of a business, a hospital, the battlefield, et cetera. So I think ChatGPT for the enterprise is just different from Palantir's version of it for, businesses. But in terms of, it's not hurt by ChatGPT. ChatGPT has enabled the world to move towards a different flow of how we talk about AI. CodeStrap actually had a great article about this that I'll do a video on probably later this week. And he's talked about why AIP and why Foundry together and the demand for them is going to transform businesses, which is just a little bit different than what, ChatGPT is just not that type of product. That's not what their intention is versus what AIP is. Also, we have a 50 million in gold. Yes. Now, I don't know if we're going to sell this. I think they should just sell it and take the profits, to be honest, because I don't know how much higher gold's going to go, but maybe they think that things are going to get worse. China, Taiwan, anything that could happen. And as a result of that, they're keeping that 50 million in gold as a result of it. Also, in the interview I saw this week, again, there's a lot of news to cover, guys. So I have a lot of videos coming out on this. But, basically Palantir was called the first software prime, right? And so this idea that they are going to become a software prime and that the United States is already acknowledging them like that, that's just going to be more government contracts, a lot of more government contracts, especially in the world we're going. Less than 1% of the DoD's budget is spent on software. And so Alex Karp in the interview, he was like, if I was the head of the DoD like today, I would transition that to closer to 5% and eventually 10%, because that is the only thing that is what's protecting us against our adversaries is our ability to have software at scale. Like to see buybacks. Yeah, look, I don't think I wouldn't want to buy back because, again, if you are getting more on short-term treasuries, don't buy back your stock because that's like a shareholder-friendly thing. Do that later. Take that money and get some return on it, get to GAAP profitability, and then buy back your stock at 10, 11 bucks, whatever you're going to buy if we get there, right? So for me, I don't care that much about buybacks. I'd rather them do something more productive with the money than buy their own stock. Like, do something good. And then eventually, we'll buy it back. They're just not a big tech company. They don't need to do $90 billion share buy. Like, they don't need to do all that. They need to just grow. At this point, Palantir literally just needs to grow. Palantir's AI has been stated to be 2 years ahead of ChatGPT. That with Palantir's foundation of ethics and national law, they have in moats. I agree. That is the argument. And, they've been working on this stuff for a while in the context of business use cases, not just like, whatever fun stuff you may think ChatGPT can do. And that's where the real money is, right? In the context of business use cases. All right, let's take a look at this in the banking crisis. So, rumor that we could possibly stop people from shorting banks. That's going to impact a lot of the markets. Let's hear why this would happen.
The article examines whether bank short selling should be banned want to bring in Liz Hoffman, Semaphore Business and Finance Editor, and the piece that she writes, quote, short sellers have made $7.4 billion by betting against the regional banks since the beginning of March. We want to thank you for joining us. Do you think there's a chance it gets banned? I mean, we lived through this in 2008, and there was a moment, and there's been, go back to 1930. I think President Hoover talked about potentially banning short sellers. I mean, this has happened before, this conversation.
It has. Good morning. Thanks for having me. I mean, listen, the historical inputs seem to suggest that it doesn't really work. So I don't know that it's exactly the right move here. But I will say that, this is not a depositor story anymore. It's an equity story. Depositors, the latest data suggests they stopped freaking out about 2 or 3 weeks ago, whereas the equity markets have gotten increasingly bearish on these banks. And so if you have an equity problem, I think it requires an equity solution. And I can't think of another one. Now, to your point, to the extent it has worked, it works when it's a bridge to a very clear thing. So in 2008, bank stocks continued to go down during that 2 weeks, but actually outperformed the market. And in the meantime, they passed TARP. So if you have a very clear endpoint that you are trying to bridge increasingly nervous equity holders to, it's not a terrible idea, I don't think.
How long would you put it in place?
It was 2 weeks last time. I mean, the thing about this particular crisis is that it has been like fits and starts, very slow moving, and then a lot of urgency, and something goes terribly wrong, and then we settle back into this kind of low level drumbeat of kind of anxiety, but not enough urgency to actually do anything about. I asked Jay Clayton about this, so I was on your show talking about this last week, and he said, look, it's a temporary bridge. So if there's an idea that you're building towards perhaps recapitalizing these banks, either privately or publicly, or making explicit that deposit guarantee. Because right now you have this deposit asymmetry where at the biggest banks, they're effectively insured. The smaller ones, no one's really clear, and the Fed and Treasury have kind of gone out of their way to not say those words
Liz,
out loud.
I've made the argument that even if you guaranteed the deposits at this point, if you're the treasurer of a small business or a big business, and you have money at a regional bank and you see the stock falling precipitously, whether you think your money is guaranteed or not, you're taking the money. You just are. So then the question, if that's true, but then there's a secondary question. You talked about 2 weeks. You'd almost have to put this in place for 2 years. I mean, we've been going.
Look at this. So this is the biggest bank failure since 2008. These are some of the big ones, right? I mean, like these fell pretty badly. And so the argument they're making about banning short selling, I know a lot of people are like, well, it's not capitalism, right? It's the state taking over, all that stuff. It's like, well, at some point you either have an economy or you don't. And if banks are going to collapse, that's not like the government's got to step in at some point, right? Because if you think the banks are vulnerable and you're a short seller, your job is to find opportunities where you see vulnerabilities and you just go at it, right? I mean, why wouldn't you, as a short seller, from just a pure financial perspective, short the crap out of it? And then when you have that much pressure on our banks, and then there's a bank run, and then the stock is getting hit, I mean, like, banks collapse. And if that happens, the worst thing that would happen is that everything consolidates to JP Morgan and Bank of America. And so in some respects, this is actually saving the free market with government intervention, because you continue to keep competition alive. Whereas if you let them, do their own thing, the markets would end up collapsing. So I'm a fan of this. I don't know if it's actually going to happen, but I mean, even the rumor has said short sellers very, very afraid. And that's why we are in the situation that we are today. Bank of America, 27, JPM, 137, Wells Fargo, 38. Again, so regionals are up. PacWest is up 18%. Western Alliance up 3%. SoFi, even not a regional bank, a digital national bank, but that is up at 526. It was at 470 last week after their earnings triple beat. And that rumor on Friday has sent all banks doing well and up today. Any thoughts on the short report on IP? I think it might be right. I would not mess around with IP right now. I mean, some people got in at 28, which is awesome. And, maybe they're up at 38. But I personally would not play with that one, because there might be some truth to the Hindenburg stuff. The Square report, I don't think there's any truth to. The Hindenburg IP one, there might be. Oh, shoot, I forgot. We went over 300 watching. Where's the bell? That is correct. Thank you for 300 people. I do this on Finance Junkies every night because I get so excited when we hit 300. I forgot we hit 300. I just saw 345. Thank you guys. That means a lot. It means so much to me. Hit 300. Gotta ring the bell. Okay, so that is going to conclude the market open. Look, so a couple announcements. We've got Palantir earnings today. Okay, it's already up. The live stream is there. You can set the notification. Remind yourself 4:30 p.m. It's going to be a big, big deal. Let's see what happens. We're going to have a lot of analysis, a lot of thoughts on it. So I hope to see you guys there. And whether it's good or bad, it is another quarter in progression for a company that we all think can be really big. And so really excited to learn and see what's going on. And maybe it's really good. And maybe there's a little market reward for that. Maybe it's not. Maybe it's average. We have no idea. And that's the fun part of investing, because this is when you're investing in a growth company, not Apple or Coca-Cola or Microsoft, you're taking a risk. And that risk provides a little bit of excitement. That journey is fun. And so I'm happy to be able to cover it for you guys. So that's the first thing. Second thing is please follow on Twitter. Again, Twitter's in the description. If you have not followed on Twitter, follow on Twitter. I'm actually going to put it in the chat right now. The reason I'm saying this is because there is a lot of Palantir coverage that's going to be happening, not just from me, but a lot of other accounts. So follow on Twitter. Make a Twitter if you don't have a Twitter, and follow me there. And make sure you're following me on Twitter, because during the live stream, I'm going to be taking the best moments, the best quotes, all the stuff that I can't say live because we're listening to the stream, and just banging them out on Twitter. So you guys are going to see everything there on Twitter. And final thing is this entire week is going to be dedicated to coverage. We've got to go through the numbers. We've got to go through probably a shareholder letter. We've got to go through the demand for AIP that I know they're going to talk about. We've got to go through changes in operationally in the business. We've got to go through any red flags we may see in the earnings. There's going to be a lot of stuff. And so it's going to be excited to break in goal down and figure out what we have to do. That's it. I hope to see you here. Thank you so much for being here, guys. It'll be exciting. Last time, I hopped on, we had like 1,800 people. And it was crazy. It's an awesome community we built. I'm grateful for it. It means the world. And I'm excited to see what we get. And then, the entire week is going to be affected with CPI and all this other stuff going on with Palantir earnings. So it's going to be really, really cool to see what happens. Not to mention, we get to see Karp again. And we get to see what he's got to say about his business. He just did an interview 2 days ago at some conference. So we'll see what he has to say about everything going on. All right. That's it for me. I will see you 4:30 today to analyze everything going on. Thank you all. I will see you then. Follow on Twitter, and let's see what we can get for Palantir earnings. Bye, everybody. See you soon.